Welcome to Financial Accounting. My name is Professor Rodney Lewis, and I'm here to teach you financial accounting. Please pay attention, get into this class. It's really interesting, and I believe you're going to really like this. It's beneficial for anybody who wants to learn accounting. This financial accounting course is equivalent to both Accounting 101 and 102 back in the old days. There are no prerequisites. This is an introduction to the complete story or the complete science of accounting. This financial accounting course is under the category of business. If you have an interest in business, or if you happen to be a business owner that wants to learn more about accounting and tracking the activities in your business, trying to grow it or trying to make more money, you need to learn financial accounting. This course is also designed for people who would like to work as bookkeepers, people who would like to support a business. So if you have an interest in getting a job as a bookkeeper, you would be interested in this course. This course is going to be delivered in a series, and it will cover everything you need to know about the first level of accounting. Other accounting classes that I will be putting out will be managerial accounting, which is equivalent to your intermediate sets of classes for accounting, and then advanced accounting. And other business classes I will be putting out will include Principles of Economics and Microsoft Excel products, which is very useful in the field of business. Accountants follow special rules or professional rules and concepts, which are under the authority of the Securities and Exchange Commission, which is shortly, or the acronym is SEC, and the FASB, which is the Financial Accounting Standards Board, ask us to do our accounting in accordance with GAAP, which is Generally Accepted Accounting Principles. You'll see that throughout this class. There will be a test at the end of this series, but let's go through some of these concepts. Now let's go through some generally accepted accounting principles. Let's start with reliability. Reliability is the same as objectivity. In other words, we report information that is reliable and not fudged in any way. We have to be objective and not subjective. Accounting information is information that can be proved. And people who read financial statements sometimes exercise the diligence to prove whether or not the information is reliable. Another principle that we may have is the cost principle. In other words, everything that we account for has a cost, either a price or a cost to put on our books. There is a concept in accounting of economic entity. In other words, anybody that you do accounting for, any company that you do accounting for, has to be kept separate and apart from its owners. We'll get more into that because basically when you're going through accounting and answering questions, which you will have a test, you have to understand the perspective of who's asking the question. So we'll get more into that. There's also a cost principle, which states that assets or services acquired by a company should be recorded at their actual cost. And there's a going concern concept, which means that as we do the accounting for a company, we have to believe that the company has reason to stay in business. Now, there may be some red flags, but we have to do the accounting like we don't see the red flags. If we're doing auditing, it would be a different story. Also in accounting, we use something called the stable monetary unit concept, but we're talking about the American dollar. So if you're in the United States, you use the American dollar to do your accounting. The other very important thing we're about to get into is the basis of accounting. Very important. I will be including a list of accounting terms, so make sure you check the slides and things that I have attached to this file for the accounting terms especially for this segment. But right now, I'd like to talk about the accounting equation. The accounting equation is very important to the profession of accounting or bookkeeping or anything you do with respect to money or assets. Anyway, the accounting equation has a left side and a right side. And in between the left side and the right side, you have an equal sign. And that's why it's called an equation. And what we're talking about when we talk about the left side, we're basically talking about assets or economic resources that will have some future benefit. And then we say that those assets or economic resources equal liabilities, which is what the company owes. And what's left on the other side is the equity, owner's equity. It could be stockholders' equity or any of the sort. Anyway, that accounting equation is why we have what's known as double entry bookkeeping, which means that if we make a debit entry, it has to be accompanied by something that's going to balance it out, such as a credit entry. Now, to become more familiar with the accounting equation, I'm going to introduce something to you that accountants use called T accounts. Now, T accounts are used because, remember we said debit and credit. Debit means left, credit means right. However, based on our equation, you could have lefts or rights on both sides of the accounting equation. We're going to go through a few of those as we look at some accounts. Now notice, the account names are quite generic. However, well, you will be creating account names for yourself in the future, but notice that something in the account name should let you know if the account should be on the left side or the right side of the accounting equation. Now, all accounts have a left side and a right side, every individual account itself, but where it belongs on the accounting equation. So now, when we look at accounts payable, that's a liability account because you owe. It's something that you have to pay. That's going to tell you that that should be on the right side of the accounting equation. Salaries payable, notes payable, capital stock, sounds like owner's equity. That should be on the right side of the accounting equation. Retained earnings, sales, supplies expense. Guess what? It's on the right side of the accounting equation, but it carries basically a debit balance. Salary expense, rent expense, insurance expense. These are on the right side of the accounting equation, but they're connected to your increases and decreases in revenue. Now, just a little bit of additional information. Left side and right side of the accounting equation accounts, every now and then, you're going to have something that's going to be on the left side. However, it carries a credit balance. It's called a contra account. That is something that will give you your net realizable value of assets, like a depreciation account. Okay? And there are times when you're going to have what's known as an adjunct account. It's on the right side of the accounting equation, but it's to help you to get to the bottom of a particular issue that you're accounting for. So take note of that. Even though you have accounts that belong on the left side and accounts that belong on the right side, from time to time, you're going to have an account that that's on the left side that you wouldn't ordinarily put there, except the fact that it's something to keep one account in range, or something on the right side, a contra account or an adjunct account.